Hey guys, I hope you and your families are well. Welcome back to another deliberate practice bar by bar session. We're going to be doing Zoom, which is a very good stock to be working through, conducting your own deliberate practice sessions on, because it goes through the entirety of the price cycle. Phase 1, Phase 2, Phase 3, Phase 4. So you are trying to train your eyes to the repeatable characteristics that happen in each of those phases. So let's zoom right in here. Let's load Zoom up, and I'm going to show you how you can go back in time. So load up the ticker, zoom right in, then press Alt-G, and then you can go back in time. So I'm just going to go to 2017, which is pre-IPO for Zoom. So we're going to go from the IPO to the present day. Before we jump on into it, I want to let you know that MarketSmith are today's video sponsor. If you're interested in a discounted trial, there is a link in the comments below. So here we go. We have got Zoom loaded up. And I'm going to be filling in that Excel spreadsheet with the results as you saw last time. So we are just going through, and we're looking for setups. I'm going to use my keyboard up here, so hopefully it sounds a little bit better for you guys, rather than here click 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 click. This is actually looking fairly interesting. I think it needs probably a little bit more work. So it's starting to tighten up in there, just kind of it's actually looking quite interesting already, isn't it? Like the base to get a little bit bigger. Let's see. Let's just zoom out there a little bit. I kind of missed that one. It was kind of trigger bar in there, but a bit whippy. But the base duration, a bit questionable. Let's keep going and see what can tighten up. Okay, this is starting to get my attention now. So again, looking for flags, looking for VCPs, looking for cup and handles, looking for low pivots, high pivots, mid pivots. I think it needs a little bit more tightness, but that's starting to tighten up. Still kind of a little bit whippy down there. Okay, good reaction on the earnings, so we can see a bit of demand stepping in. We can see a 52-week high. Let's see how it doesn't quite go tight for long enough. So if you look in this region in here, for instance, see how it's still kind of, okay, it's down, it's up, supply shoot, it's down, and it's same in here. It's kind of whippy. It's not kind of quiet, and to be fair, it's now starting to get a little bit more quiet on the 1021 EMA. Again, it's not quite quiet enough for long enough in there in terms of like the tightness for me. We'll keep going. So again, looking for flags, looking for VCPs. This is still, well, this is now getting a little bit better. See how you kind of zoom out here? You've got some high lows forming. You've now got the 50 SMA coming in, so it's starting to cluster around the 10, 21 and 50 SMA. Volume has been drying up for generally a prolonged period of time. So this is interesting if it can kind of carve out a pivot. Oh, that's now starting to get interesting with that kind of tight trigger bar. Dimitri taught me a little trick as well. You can use a fib retracement tool. So put it on the high, snap it to the low as well. So that will give us our stop loss, which is where I want it on the low, and it will also give us a 1 times the stop loss, which is going to be the first level, 2 times, and then 3 times. So that helps in terms of the free rolling. So I tell you what, I think I'd probably be targeting that. So I'm targeting it through, hopefully you can see these figures and stuff like that, 94.18, and then my stop loss is going to be lower that bar, 92.35, and then I'm looking to sell 1/3 at this level here, 97.83, which is 2 times where my current stop loss is. So let's call that active. So I would have got filled and whipped out. For the purpose of that, I'm going to imagine that I did actually get knocked out there. I thought it was kind of tightening up. That's a 2% stop on that one, and that's going to be, I would call that a low pivot. So let's go into here. We're going to go into our low pivot table. So we've got a loss there of 2%, and you can see these orange figures here. That's just so everything kind of feeds in. Once I've done enough of these videos, I will take those orange ones out, but it's just so these tables over here work. And from the last video, I said I was going to figure out how I was going to do break even. I thought I would just do it like this amount, and then I can calculate that separately. So let's not waste time. Let's go back into it. So yeah, a little bit frustrating that, but maybe it can reset back up. Happy to take a quick loss, get knocked out same day. I'm not tying capital up, and then not sitting through all of this in here. So let's keep going. See stocks in a downtrend here. We want to see evidence of demand stepping back in. Okay, kind of tightening up there. It's all over the place at the minute, isn't it? Again, this is not constructive price action, which again is what you're visually trying to train your eyes to. This is getting a little bit better. You can see the demand moving in. Okay, now we have a lot of demand moving in. See this bar here? Big volume. Call this bullish synchronicity. See that there? Great. Opens, gap up, open on the low, push up, good volume coming through. Now if it can set a flag, a VCP, something like that, it's going to be of much more interest. Okay, nice strong uptrend here. That was quintessential kind of trigger bar. I know Oliver would call that a wick play as well. For me, that base duration there, questionable whether that's a long enough base, which is why I didn't take that. This is gonna be the thing. Stock can be trending up, and you can just go, there wasn't a good entry, but this is looking more constructive, isn't it? There we go. Just as I was saying, it was trending up, non-entry. There you go. Cup and handle. See how that volume is just stair step down there perfectly. So let's go and use our fib retracement tool like that. So targeting it through 152.28. Stop below that bar 145.10, and then we're looking for a move to 166.64, and then the stop on that is going to be around about just over 4.5%. We'll call it 5%. If you want to set this fib tool up, by the way, you can find the fib retracement tool, and then you can pause the video. This is how I set it up. So you have these are then the levels to get 1 times, 2 times, 3 times, get the kind of 0 line in there, so on and so forth. That there is how you do it, and then you can see that. You can pause the video and copy that as the fib retracement tool. So let's target this one. Okay, getting out better. Now we just got to adjust this slightly because we would have got filled at the low of this bar here, and then stop loss there, and then price did what was the high of that bar? Come on, trading view, give me the high of the bar, 167. So we're not quite filled in there, but what I would actually do here, guys, is I would move up my initial stop loss. So what we're saying is we actually got filled at 153.49, and I'll stop down here. But what I'm going to do, and this is again the active risk mitigation part. So you have 3 parts to a trade. You have number 1, identify; number 2, control; number 3, mitigate, free roll; and then number 4, optimize. So what I would do here is I would actually go, well, I'm just going to bump up my stop loss. So then you see this middle green line here. That's going to be 2 times wherever my stop is. So what I'm going to do is just move this up here marginally, and then you see how we're then bringing that green line in. So 168.20. So I've just pushed up my stop loss a little bit. Still underneath 150. It's still underneath the 10 EMA. It's 146.13. Then I can free roll on the first day. So in here, this is entry plus 1/3 to free roll. That makes sense. Hopefully that kind of makes sense. As we do more examples in these videos, hopefully it'll make sense. But what I want to do is take all of the risk out of the trade, preferably on the first couple of days. And now they're risk free with the remaining 2 parts. So gaps up there. We'll just see gaps down here. So if price comes back down to this red line here, I'm going to be stop, break even. So like that, I'm stop, break even. Rather than getting knocked out with a full stop, I'm out of the trade, break even. So that hence the nature of active risk mitigation. So the break even count, we're just going to knock that up to 4. Let's go again. It's a bit of a choppy stock zoom, isn't it? You were probably thinking it was just going to go to the moon, but quite the opposite. That was maybe carving out a low pivot there, but see how it's kind of wedging up? I don't really like those wedging up ones. I much rather that kind of little sideways Davis box type action, as the stock's kind of doing now. Okay, but if demand coming in, let me use these arrows over here. A little bit less noisy for you guys. Questionable base again. It's kind of like it's questionable. That there's not a proper base for me. It's a stock in an uptrend instead of a stock kind of basing. So let's keep going. I'm sure it's tight, but that's looking a little bit better. But it's just got this like wedging up action. It's just not really. Oh, that's now starting to look better. So see how it's now going sideways for longer. You see that? This is, for me, this is more constructive. It's sideways. It's along the 10 EMA. So if I was looking at it maybe through the high in there, something like that, where would my stop loss then be if I was going through the high? Underneath those bars, getting into kind of 6% territory. I don't know yet. I'm not quite feeling that one as of yet. It's just didn't quite look right. But this is better. A couple of contractions. If price can now set, that there would have been a good trade. Do you see that prior day in there? That there would have been good. Stop there underneath the low of the day. I don't know if I really want to buy it at the high of the day there. I'll just give it a little bit of time. Oh, that's now looking better. Okay, so this one here, assuming the stop makes sense, we could go there, and then we could go, say, underneath the 21 EMA, about 6%. So what I'm going to do is target it through the high of the last 2 bars, stop loss on the low of the last 2 bars. So targeting it through 271.10, stop at the low of that bar at 256.11, and then my free roll target is 301.08. If I get an opportunity to maybe free roll underneath 300, I'll think about it, but that's how I'm thinking about the trade. So we are entered in here. That's going to be our entry. Let's see where the price holds on. That's looking pretty terrible. So we're going to be stopped out there. And that there was a stop, is a higher base breakout, 6% stop. So not doing too well so far, am I? 6% stop. Let's go back into it. Let's delete those there. Yeah, a bit choppy around pivots, isn't it? Oh, that's acting a bit better there. Oh, that was better in there. See how it got tight. Good action on the earnings. Okay, popping up on the earnings. Pull back down to the 10 EMA. That would be quite aggressive, but it's doable. So see how it's up on the earnings, pulls back into the 10 EMA. So stop then underneath the 10 EMA in terms of the risk. That there's going to be around about 6%, and then looking to free roll at 405.14. This is aggressive, kind of pull back but buy, volume stair steps down. So let's do that. So we're targeting it through the high at 365.50. Then we're looking to free roll at 405.14. So there we go. We get filled. I haven't quite free rolled it. There we go. So our entry is obviously this day here. It's going to be our entry, and then we're able to free roll the trade in here. So I'm just going to put 1/3 to free roll. Hopefully that makes sense, because even though it's a red bar, I use sell limit orders when I'm looking to then free roll the trade. So now I'm looking to use the 10 EMA and 21 EMA as trading stops. That's going to be the black line and the blue line. But if price starts getting extended from the 10 EMA, then I'm going to be looking to sell. So okay, starting to rock and roll. Now what I'm going to do is just put an imaginary stop loss in. I would probably now be stop break even, because this is kind of test and reversal type action for me. Hopefully these lines will they won't get in the way too much. So okay, stock's getting out quite well, still going all right. So we're using this black line here as a trailing stop, and we're also using the blue line as a trailing stop. It's tight. It's really tight. It's probably going to get a bit confusing if I add back to a position. That's pretty good. So again, just trending nicely, still trending well. Okay, that's going to be a 1/3 sale for me, close below the 10 EMA. So now with my stop loss, I know it's a little bit confusing with all of these lines. Hopefully it kind of makes sense. Let's be somewhere like that. So I'm now using the blue line. That there is going to be the next exit for me. So again, just trying to get that intermediate term trend. So that there's going to be the exit. So let's just take a quick little reading. So we had a 1/3 sale at around 405. So that's going to be 10%, and then 10 EMA is going to be 40%, and then 33%. So we've got 10, 40, 33. So let's go in here. We type in 10. We type in, not 1,000, that would be nice. 10, 40, and then 33, just to get the average gain there, and that's going to be 27%. That there was a low pivot for me, 27.67, like that. I'd help if I put it in the right one, wouldn't it? 27.67. There we go. Come on, brain. So okay, better trade than that. Again, that's an aggressive move, but it was the tightness, the pullback, the positive reaction to the earnings. But there is certainly a more aggressive kind of low pivot entry. Let's keep going. So potentially a decent sized base here in terms of how the stock's been going sideways. Yeah, quite interesting. What's interesting as well is, I don't know if you guys picked up on it, we traded through the COVID crash. See that in there? That's that there is the power of relative strength. You didn't even realize, and to the extent I even forgot to kind of mention it as well. See the 52-week highs, stock's telling you it's very strong indeed. So let's keep going with Zoom here. Maybe I could have got it through there. That there was a pretty good setup, to be fair. But then kind of thinking about the price cycle, it's had a big run up here. Earnings, relative strength is now decreasing. We'll see if it can set back up. Let me use these keys over here. It's starting to get hit a little bit. You can see like the bearish breakdowns. So you see in here, you see in here, you see in here. See how it's that there is kind of acting differently to how it did on the uptrend. So again, you're trying to train your eyes to, okay, what does the stock do potentially in a phase 1 base? As it starts coming out of a phase 1 base with the increasing RS, now you can actually see the RS lines rolling over. Now I'm not going to pretend I don't know what Zoom does. Clearly I know phase 1, phase 2, phase 3, phase 4, but it's kind of the deliberate nature of things as well. You had the highest volume ever coming through for Zoom on the earnings up here when the stock had gone on a pretty big run up here in terms of phase 2, and then kind of an inability to kind of build a new base and go. It's then kind of just rolling over, gapping down to the downside. We call that bearish synchronicity. We'll keep looking for setups though. I'll see if I can get in any trades, but as soon as it starts getting below these longer term moving averages, as you can see now, it's below the 200, the 100. This grey line here is kind of sloping down. This looks like a lot of distribution here on the earnings. Maybe I can find a pivot spring or something like that to try and trade. Let's see. So it's either got to be a pretty good pivot. It's going up to the 200. Can't live above it for very long. It's trying again. Let's see, maybe it can set up a trade again. Quickly back below the 200, gapping down on the earnings. That there's a really bad sign, that kind of gap down on the earnings. This action over here on the earnings, kind of nothing burger on the earnings. It certainly looks more so like institutions are trying to get out. Context if this stock is in a long-term decline as well. So let's keep going with it. Again, gapping down on the earnings here. It's just not looking right. And again, look at all the red dots. Oh, didn't mean to do that. Look at all the red dots coming through on the RS line at the bottom. You see that at the bottom of the page here, 52-week lows. This is telling you the stock is extremely weak versus the S&P 500. Again, it can't even get above the kind of 21 EMA. I can't even see like a pivot. So a pivot spring for me when I'm trading springs is something like this. So you have here. So the stock kind of comes down, climactic change of character, something like that. And then when it kind of retests in here, that's where I could be looking for a spring, or in here. So these kind of levels in here for springs off support. But I would like to see this action here, which is like a clear change of character, indicating buyers back in control, preferably large volume, as a signal that the large operators are stepping back in. I'm not seeing that on Zoom. No kind of real clear powerful change of character, so I'm not really going to be interested in springs. So you see like here, price is like coming down to support, but this rally here, it's not like it's gone up to the 200 SMA and it's done that, and it's like really obvious that there's a lot of buying coming in. I'm not seeing that. It's just weak rallies and the stock basically just in free fall. So there's I don't see a breakout setup, and I don't see evidence to really be targeting a spring as of yet. That would be probably a silly VCP. Well, it's more of a Davis box actually, isn't it? To be targeting. It is kind of tightening up there. What would the risk be if I was to do that and go stop loss low of the day? It's still a bit wide, isn't it? Like 7%. Still a long-term downtrend. It's like 7%. It isn't 7% into the 52 high. I'll tell you what, for the purpose of this video I'll do it, but this is silly and aggressive. Okay, so what I'd be doing here is, if I wanted to do this, because there's some running room to the 200 SMA, which is kind of the only reason that I'm kind of thinking about this. It didn't get obliterated on the earnings report, and in here this is kind of cup and handle type pattern. Volume has been drying up, RS line has been turning up. This is very aggressive though. So 118.40 with a stop underneath the low of that bar is going to be 110.67, and then my free roll target is the middle of these green lines, which is 133.86, which is 2 times where that stop loss is, and that stop loss is going to be, all intents and purposes, about 7%. So that should be coming in around about 14% or so, something like that. Okay, so here we go. Let's see. So we get free roll, we get entered in there. Again, this is going to be very aggressive. Let's try. No, we're just going to get stopped out of this. We're going to get stopped out really quickly. That's why I'll keep it in there. But that's why that there is a silly trade, because you are just fighting the longer term trend. So I would say that's, even though stock's in downtrend, that's a higher base kind of breakout. So 1%, 7%. That's why you do not do those. It may set back up again and kind of tempt me back in, but yeah, that's why fighting the longer term trend like that, silly and dangerous basically. Don't do it. But again, that's why you kind of do it in these deliberate practice sessions. I was being a little bit kind of cavalier there, wasn't I? But that's why you kind of do it in these deliberate practice sessions as well, and then you realize, like, hang on a minute, the stocks in my model book database and all of those, 95% 95 to probably 97% of those are above their 200 SMA. So when you then see that setting up and you're like, oh wow, look at this, you're still fighting that longer term downtrend. So again, aggressive setup there, probably not worth doing, not even in these videos. Okay, kind of gap down on earnings. There's still no real like pivot spring to really be having a go at. I just don't see that kind of like real aggressive change of character to the upside. I'm just not seeing it. I just don't see it. Just okay, it's starting to get closer to its 200 SMA. It was. And there's the present day. So that is what we've just traded through. That there is kind of quintessential. That last trade I took was really silly. I kind of did it as an example in this video as well. That it's pretty silly to be taking a breakout when the stock is trending significantly below its 200 SMA like that. I know that, you guys know that, right? So phase 1 base, but these are good stocks. So in the last video we did Cisco from like 1980s or something like that. So you get the phase 1 base here, you get the stage 2 uptrend like this, you then get that phase 3 distributional top coming through in here, and then you get that phase 4 decline as well. So some of these prior kind of leaders, you think about the Zooms, you think about the Pelotons, you think about a DocuSign. What are some other ones? You got Fastly, you got Net, you got Datadog. Crikey, there's loads of Netflix. There's all sorts. But this here is kind of really good quintessential price cycle. So you want to be practicing on stocks from 30-40 years ago where you don't have kind of the market bias coming in. You want to be practicing on some of the more recent stocks. You want to be practicing on stocks that undergo the entirety of the price cycle, phase 1, phase 2, phase 3, phase 4 as well. You want to practice on stocks that lose 99% of their value, and then basically avoid breakouts in the phase 4 downtrend, like I failed to do there. But Zoom goes down around about 90%. It was choppy in this uptrend as well. This is just something that you guys will find out as well. So this is, I'm rambling at the end of this video, I appreciate that, but you'll commonly see that how a stock has previously acted is a good indication for how the stock, or in my view, is actually the best indication for how a stock is going to act on a subsequent breakout. So if you kind of pull it back and you're looking at this phase 2 uptrend and you're thinking, this looks kind of like choppy, it's chopping around a little bit there, okay, it makes a decent move there, and then it kind of chops around here. So maybe you're using the 21 EMA as a trailing stop, maybe you're using the 50 or whatever it may be. Analyze, okay, how is the stock actually moving for my sell rules, because some stocks will move better than others for your sell rules as well. So what I then try and do is try and target, okay, what are the stocks that are going to be kind of smoother movers for me in terms of the management. But yeah, I'll wrap that video up there, guys. Not kind of stellar. There was one decent trade there, but stopped out on a couple as well. So not a fantastic session by any stretch of the imagination there, but it's real life. It's kind of trading. This is the nature of deliberate practice as well. So thank you very much for watching, guys. I appreciate it, and I look forward to seeing you in a future video.